afternoon, everyone, and welcome to the second webinar on Venezuela, which is a series which is being sponsored by the Global Energy Transition, GET, based here in Houston. For this webinar series, we're going to be discussing the impact of the Venezuelan hydrocarbon law on job creation in the U.S. and in Venezuela. So we're going to be examining the reform of Venezuela's organic law on hydrocarbons, which was issued on January 29th of this year. And that provided us with a major shift from state-centric control towards increased private and foreign investment and participation. So we've got a really great set of speakers today, who I'll briefly introduce. But the first is Roland Peterson. Roland is a partner at Dempar Law Firm based in Caracas and is a specialist in energy transactions, distressed M&A, and financing. And he's a legal and financial expert in the Venezuela energy space. Thank you, Roland. Then we have Luis Galarza, based out of the US in Florida. He's the co-founder of SoFlo Solar Advisors. He's a Venezuelan American electrical engineer with a background in aerospace, M&A, and clean energy, with a focus on grid modernization and energy reconstruction. Welcome, Luis, to the panel. And then last but not least, we have Sonia Clayton. Sonia is the CEO for the Global Energy Transition. She's an expert in workforce development, energy policy, and economic transformation, with experience across more than 70 countries around the world. Her focus is mainly on Latin America, especially Venezuela and Colombia. She's an energy and technology entrepreneur. So we've got 30 minutes to run through quite a long agenda. But what I would really like to do is just to get a couple of opening remarks on the legal, the technical, the energy, and the economic and workforce angles for Venezuela and the hydrocarbon law. So could I start with Roland, please? Roland, would you be able to tell us a little bit about the investment implications and the deal structuring? What are you seeing coming across your desk? And what are the legal risks? And what are investors saying to you about the hydrocarbon law and its impact on decision making?
Hi, Kathy. Thanks so much for having me. It's a pleasure to share with you. I think that's, the answer to that one probably will take more than 2 minutes, probably more than 2 days, talking straight through it. But, in a nutshell, what we had in Venezuela, it's a radical turnaround of the situation, from a geopolitical perspective and internal dynamics in terms of, political dynamics and the shift of power from Chavista government that we had in place for over 26 years to something that we are not sure what it is. We have former vice president under President Nicolás Maduro still in power, but now we have a new balance of power between the U.S., Venezuela, and on top of this geopolitical mess that probably you all read in the news vastly over the past 3 months, we had major shifts when it comes to the oil and gas industry in Venezuela. So most important of all, in mid-January, just a couple of weeks after the events where President Nicolás Maduro was taken under U.S. custody to New York, we had a major reform, a major shift. This is more important than a constitutional reform when it comes to economics and socioeconomic, policies in Venezuela. We had the reform of the oil law, the hydrocarbons law, which in fact is the oils law, because we do have a specific regulations for gas. So oil law was reformed in Venezuela in probably an unprecedented, quick bill passing process through the Venezuelan Congress, which took basically less than 2 weeks. That is unprecedented because in Venezuela we had over 40 constitutions, yet we had no more than 5 or 6 oil-related laws. So this is a very important set of regulations when it comes to Venezuela, which is basically a one-trick pony of an economy. It's most people refers to the Venezuelan National Oil Company, PDVSA, as a country within the country, when in fact I think it's the opposite.
Mm.
Like Venezuela is a country within PDVSA. This
Oh,
is a
right.
country that, it's basically oil, not even oil and gas. And it has way more gas than any other country in the region other than the US. But, you know, oil has been the name of the game in Venezuela for the past 100 and something years.
Yes.
So this new shift, which basically, I think, paves the road for, you know, let's say, a re-entry of upstream oil field operators into the country.
Okay.
Venezuela has seen that, for over quarter of a century, basically has been shown out of capital markets, new capex investment when it comes to infrastructure, energy, oil, gas. So this, I think, could be at least in the midterm, a radical reform when it comes to, setting down some ground rules where oil operators, mainly IOCs, feel some degree of above ground risk, you know, ground rules where they can actually, like, pick up where they left 25, 30 years ago in terms of operating Venezuelan oil fields. So
Okay.
it's been very interesting. It's been moving quite quickly, and it remains to be seen where this will lead off. But so far, I would say that it's been quite quite perplexing, for those of us on the ground, because it has been a complete turnaround of what we were seeing and what we were expecting for
Okay.
2026, 2026, 2027.
Right. I mean, it's interesting because, and Luis, maybe I'll turn to you just for some of your opening remarks, because again, as Roland had mentioned, that this is mainly the oil law, and yet your background as a Venezuelan and American is in the renewable energy sector. So maybe you could just give us a little bit of a overview of your thoughts about the developments. Tell us a little bit about your background and what you feel in terms of how the grid modernization of the infrastructure in the country, and if you could speculate a little bit or discuss a little bit about investor sentiment in the country.
Sure. Thank you, Kathy. And thank you to the Global Energy Transition team for having me. I'm going to bring a slightly different lens to this conversation. As you mentioned, my background bridges both sides of the equation, which is I'm an electrical engineer by trade, but I've spent the better part of 15 years in M&A advisory and deal structuring, and I run a solar energy company here in South Florida. So I think about this reform the way an investor would. What's the asset base? What's the operational reality? And what's the path to return on capital? So I recently had the opportunity to review a technical assessment of Venezuela's national electric system. And I'd encourage everyone to think about this the way you'd evaluate an enterprise in distress. The installed generation base is roughly 35.5 gigawatts, but the operational capacity, which is what you can actually dispatch and use, is only about 13 to 15 megawatts. So, sorry, 13 to 15 gigawatts. So in business terms, this is essentially a company running at 40% utilization with a 20 gigawatt gap between nameplate capacity and deliverable output. So just this past Saturday, a 45-day national electricity rationing plan was announced in Venezuela, attributed to the seasonal equinox. But the technical data shows this is a structural impairment, not a seasonal one or a seasonal event. The country's main transmission backbone, the 765 kilovolt troncal, has lost 37% of its design capacity, and most other corridors between 40 and 50% of their capacity. Some incredible stats of where things stand in terms of reconstruction. So as I mentioned, there's 35.5 gigawatts, of which only about 14 work. There's a 20 gigawatt deficit in structure. We went from 3 million in oil production to 900,000 barrels per day. You could recover almost 10 gigawatts of capacity from just the three most important electrical grid reconstruction projects in the country, which we'll get into. There's over 100 billion needed to rebuild the oil sector. The average food basket sits at $650 a month, yet the official minimum wage for Venezuelans right now stands at 33 cents a month. And no, that's not a typo. I didn't mess up. That's what it translates to. So, you can see there's a lot of work to get done on the socioeconomic side and on having these oil revenues and other incomes to the state trickle down into the population. It says there's about 7 to 20 billion in grid reconstruction needs, and oddly enough, Venezuela has some of the best solar irradiance in the world at 5.35 kilowatt hours per square meter per day. So there is just a ton of potential in this country, and everything I just said doesn't even account for new growth, for new industries, for any of that. It's just taking what's already been built at nameplate capacity and getting it operational again.
Okay.
So happy to dive deeper into this as we get further into the conversation.
Thank you. Thanks a lot, Louis, for that really thorough introduction and overview. I think what we'll do now is just turn to Sonia for her remarks and opening comments related mainly to the economic and the labor market impact, workforce development, and regional implications. So, Sonia, please, could you give us a few minutes of your time to talk about your background and the topic?
Sure. And having been involved with reconstructions in the past from countries pretty much devastated, and looking at what Venezuela has ahead of or in the future, it is an impressive moment for the Venezuelan people, but it's also a transcendental moment for the United States to intervene and be part of it. I was involved in Jakarta, Indonesia, reconstructing the education programs of Afghanistan and Iraq. And so I'm excited to see a process similar to that, that will bring probably new programs in education, broader economic labor market opportunities for the Venezuelan people, as well as Americans operating in the region. And let's not kid ourselves, Venezuela will not stand up on its own without the help of the American people and the American operators in the field. So Venezuela is starting from economic devastation. 80% of the population lives in poverty. Massive job losses and industrial decline has been basically the common denominator for the country for over 20 years. The energy sector is not just one industry, but it is definitely the primary delivery of GDP in the country. So the foundation for national recovery is super important and goes along with the plan that Marco Rubio has in mind to basically stabilize the country first, and then recover the country, and then move on into the stabilization phase. But it's super important that operators get involved, education people, or people in the higher education programs and even technical education programs get involved, so we can develop the local individuals into better careers, better programs, better earning potential. We just heard that the local basket is $600 a month, and these people are living with 33 cents a month. So very depressing scenario, but a lot of opportunity for change, a lot of opportunity for transformation, massive creation of job potential. I think it could be great opportunities right away. I don't think so, but Venezuela holds 300 billion barrels of of oil, largest global reserves in the world. So production today is about 800,000, and we are looking at about 3 million historically, but we need to bring up the production. We need to bring up the operators, the individuals that can bring jobs to the country and the individuals that can integrate leadership from the United States in order to lead this transformation. So economically, it means that there's an opportunity to repair, to stabilize, to bring security and safety to the country, and to normalize it. It will not happen right away. It will take years. Remember, it took 26 years to get Venezuela where it is. And obviously, it's going to get another, a whole bunch of years to bring it back to its full capacity. But it's definitely a resilient country. And we look at the potential of creating hundreds of thousands of jobs in that region.
Yeah, thanks. So, I think it's a really good sort of tipping off point. And Roland and Luis, I'd love to have your views on this as well. In your perspective, is the hydrocarbon law, because it opens up and invites private investors in IOCs, across the board, is that where you see most of the job creation opportunities coming in? Is it from foreign companies or is it from domestic companies? And then Luis, I guess, so that Roland is maybe a question for you. And then Luis, maybe you can chime in a little bit because we did talk about, your background is in solar. You have a lot of experience in M&A, but is that going to be one way in which we deliver positive impacts through energy delivery as well as through job creation? So maybe I would just like to pick up on those 2 points. Roland, your view from the hydrocarbon law, the investors that you've been speaking with, and Luis, also from just your overview of what the grid looks like and what the challenges are. No energy, no access, no jobs. Perhaps is something that I want to explore with you. Roland?
Hydrocarbons law, to be honest, is nothing but a framework. It is a piece of paper at the end of the day. So I do think it provides it points towards the right direction when it comes to reinvestment in the country, capex being invested into upstream oil assets into Venezuela, and that in the long run translates into additional labor being necessary on the ground on Venezuela, which it's in a dire need of well-trained, well-educated engineers, which have fled the country massively for the past 15 to 20 years. But what the oil law does provide is basically some ground rules where I do feel like IOCs feel comfortable. At least it's checking that particular box. Like you have above ground risk, which is pretty broad, and it's massive in most oil producing countries, and it's a huge aspect when it comes to risk analysis metrics when looking into different countries and different assets across the globe for this well integrated and global presence companies such as the IOCs. So one thing that the oil law does provide is a lot of flexibility for operating models. Like Venezuela beginning on 2006 shift from unincorporated service agreements, which basically were the way how most upstream operations were undertaken in Venezuela. It shifted to an incorporated JV model where the Venezuelan state, through PDVSA, the national oil company, basically held mandatory majority, which translated in operating control in the JVs. It translated into procurement control, which was a key aspect for oil operations. And it had a carried interest in financial terms, so it actually didn't provide any capex or funding for this project, which was basically undertaken by the private operator, the IOC partnering up with PDVSA. What we have now basically is more of a blank sheet. So this is a blank slate where bespoke agreements can be tailored to specific scenarios, like PDVSA or the Venezuelan government through the hydrocarbons ministry. Nowadays, what they can do is basically sit down on a case by case basis, where where operators can set ground rules for specific projects.
Okay.
That is certainly a step in the right direction. I think what for the levels of capital intensivity of this industry and the starvation of new capex that Venezuela has had for the past 3 decades, probably we need a bit more than that. This is, like, as I mentioned in my introduction, this is a step in the right direction. We need more than a couple of steps in the right direction.
Okay.
Yeah.
Yeah.
Or maybe more execution. Maybe more execution. I like what Roland is saying, because just creating a simple set of laws is not going to fix the issue. As you say, it's just a blank slate. But this is at least the rule book that determines whether investment flows, and when investment flows, jobs get created.
Mm. It's interesting because, Roland, I think you really veered I mean, you talked about the IOCs, being some of that they need to feel comfortable first, and that bring this law helps them do that. I would be curious to hear about whether it's only the IOCs that are going to be creating the jobs. Sometimes some of the more dynamic, faster moving entities are the smaller businesses that might be interested and can move a little bit faster. And also, I was curious about, just when you talk about negotiating deals on a case by case basis, well, there are pros and cons to that as well, especially in a country that has some questionable governance structures there, and has a reputation as it's had in the past for transparency and things like that.